But if it does break this level, that's where you get another big wave of selling, probably down to this 13,000-ish level here, maybe 12,000.
Hello everyone and welcome to the Daily Crypto. We have Gareth Soloway with us yet again, who is going to update us with the latest market news and analysis. But before we get started, let's take a look at the Fear and Greed Index for today. Currently it is at 24, same as yesterday. Currently, Bitcoin and Ethereum are trading for 19,100 and 1333 respectively. With that out of the way, let's jump right into the video.
It's an ominous signal. Historically, it's told us that there is a recession coming, and the more the Fed hikes rates, the more I believe that we're nearer and nearer to not just a recession, but something far worse. And I think that's the scarier thing to me. And I think it's important to recognize too is that, you know, if this was 10 years ago or 5 years ago or even 2 years ago when inflation was at like 1%, 2%, it's like, okay, well, if we go into a recession, no big deal, because the Fed will come out and print money and we'll get out of the recession in a year and be off again on a good economy. But when you have inflation where it is, it's really going to hand tie the Fed. It's going to handcuff the Fed, and then they won't be able to get us out. And my biggest fear is we get in this longer term recession that literally lasts for like 5 or 10 years. And it's just going to make everyone miserable. I mean, jobs and everything is just going to be kind of in a bad state of affairs.
The 10-year bond yields have been a great indicator of a future recession whenever it was at its peak. Now that the Fed has increased rates by another 75 basis points, it is practically putting the economy into a recession, that too, in a high inflation environment. This really limits what the Fed can do in terms of getting things back under control, because they can't just print more money this time without severely compromising on the future economic conditions.
I mean, you know, I'd be in the camp that so number one is when the Fed raises interest rates, there's a lag effect before it hits the economy, right? So that's the concern that I have, is that they've now 3 meetings in a row done 75 basis points, and I'm not sure that the economy has yet felt the full effect of those, certainly not of the last one. And so it makes me wonder if all of a sudden we're going to see economic data drop off a cliff where even the unemployment rate could start to spike up dramatically. And does it mean that in 2 months, in November, maybe the Fed only does 25 basis points? I think they're still going to do something, because they're guiding aggressively. They don't want to look like they're now wusses, right? So they'll probably just do some token amount. But if we're seeing that economic data, and if the CPI data comes down decently, then I think they should back off. And again, I'm all for getting inflation under control. But the question you have to ask yourself is there a way to do it where you can slowly ease it into the system and bring down inflation versus stamping on the economy and then causing even more hurt, right? So think about people that are now experiencing inflation and how much that hurts. Now take that and just throw them into like a bad recession. And it's like 2 wrongs don't make a right here. So you have to do it in a way. And that's my only concern with the Fed, is that they seem like they're very egotistical about it. Like, oh, people lost faith in us during the printing, so now we have to prove that we're strong and macho and like just crush it.
Gareth believes we haven't seen the full effects of the previous 2 rate hikes, let alone the most recent one, because there is some lag period before we can really see how the economy has been affected. According to him, the Fed is acting very egotistically because they're basically trying to prove everyone wrong by taking extreme measures that are putting America's economy at risk.
So this is the chart of the S&P 500, and you can see, I mean, even for a bear market, there's been big bounces, and always remember that bear markets have these kind of massive rallies to them. But look at how fast we came right back down to that June low, and we're now really testing that June low. And ultimately, I do think we are getting into a level where we probably get a small bounce. You know, I could see the bounce back to maybe 380 on the SPY, but then I do think we're going to break lower. And I still have the target right down here. I mean, this is a glaring spot for where the S&P probably wants to go, which is that pre-COVID high. So just before the collapse in March of 2020, this is where the markets were trading, which was an all-time high back then before the collapse. Then obviously we know gangbuster printing money and checks to Americans, and now we're starting to suck that out. So we're only, I think, about 7% away from that. It does seem very likely by year end we should be testing that.
The S&P 500 index has been trending lower for a long time now, but it is sitting right at an important support level, from where we could see a small bounce. However, Gareth expects it to break down at some point and ultimately retest the COVID lows.
I think for me, it's expecting a near-term bounce. Probably I could see us going a little bit lower to this area here, around 358, 357. So a little bit more downside on the S&P. Then I think you bounce into mid-October, maybe even into the midterm elections in early November. And then I could see us seeing some hefty selling following that into December. And then, always around Christmas, there's always a small chance you get a little bit of a relief rally. People are happier with the coming, holidays and so forth. But again, it's hard to pinpoint timing. But I certainly think, before year end, we're at least hitting the pre-COVID highs.
Gareth is in the camp that we see a bounce in December during the holidays because the market sentiment is much better and people have some extra cash saved up to invest. But it will be temporary and we will see a sell-off as the final stop for S&P 500 will be the pre-COVID highs.
And the DXY is just a rocket ship to the upside. I mean, look at today alone. Look at that green candle.
Where are we at? What is the price?
We're over 113 on the DXY, and that's again a 20-something year high on the dollar. If I go to the chart here and zoom back, you have to go back to 2002 before you were at the same level. So you're talking about a 20-year high. This is probably where it's going. 120 is looking very intriguing, and that's still a long way away for the market. So that could force a fair amount more downside. And again, the higher the dollar, the markets hate, risk assets hate a strong dollar. They want a weak dollar or at least a stable dollar. But yeah, you throw that in the mix, then you throw again, like what we looked at on the 10-year yield and how that's been spiking. And it really, I mean, we are in unprecedented times for these type of things to be making these type of moves. Amazing chart here just on the 10-year going from 2.5% to nearing 4%. In basically, this is the weekly chart, so basically 6 months or so.
The dollar is showing no signs of slowing down and is already at 20-year highs. Gareth believes it could rally all the way up to 120, retesting the 2002 highs. Because of a strong dollar, the 10-year bond yields are at almost 4%, but all other risk assets will continue to get smashed. This is why we are seeing major tech stocks and cryptocurrencies constantly dropping lower.
Yeah, so I mean, Bitcoin is just holding on to this little bit of support area right here. It looks like this support was put into play back in June, and we've kind of tested it. We'll keep on testing it. As long as it holds, that's the one positive you have. I will say this, the strength of the dollar today and the stock market, I think the S&P is down like 2.5%, which is a huge move for the S&P. The fact that crypto is actually holding up somewhat is actually impressive. But if it does break this level, that's where you get another big wave of selling, probably down to this 13,000-ish level here, maybe 12,000. So again, it's still holding support. You got to respect that. But if it does give way and we start trading below the June lows, then look for that $12,000 to $13,000 target. Unfortunately, with my views on the macro and the economic kind of markets, I do think we are eventually going to, at minimum, 12 to 13,000.
Even with the increase in dollar strength, Bitcoin seems to be holding up really well because the S&P is already down by 2%. However, it is looking very weak, and if we break the current support, then there is no support till 12 to 13K level. Gareth believes it is extremely likely that we see a $13,000 Bitcoin in the near future. Thank you for watching this video. Show us your support by dropping a like and subscribing to our channel. See you guys in the next video.